Happy Friday, everyone. Welcome back to the last day of the week. Today is packed with events as well for our launch of our crypto product. So today we are coming here with Dan, and we're going to look at how to read the data coming from the option market on crypto. So welcome, Dan. Glad to have you. It's been a while.
Hello, Fabio. Yes, it has been a while, but we haven't stopped being busy. We are preparing for even more things, and I'm very happy to be here because crypto has been a very interesting trading vehicle, and finally we can trade it not only with options, but we can trade it with proper and good data, which will make life so much easier for all these people out there. Happy to be here.
Yeah, so I think what I will just do a recap of what's available on the MenthorQ side, and then I'll pass it on to you. Maybe we show some of the option things that we have and how you would read them, and how users can potentially also understand the option market coming from the crypto world, which is also increasing and very important. So first, actually, let me share one of my screens here, and let me go through one of these slides because they're very, very important. So why are option on crypto kind of like getting very key for retail traders? I want to show this slide first before we go into the platform. So what we see here is that clearly we are at the beginning of a very strong trend that could potentially become bigger in the future. Here we see the change in open interest on Bitcoin options coming from the derivatives market. So we see that the open interest went from about $5 billion in 2022 to about 30 plus billion dollars in 2025. So like really exponential growth in terms of open interest, which is of course a very, very important data point. Currently, the derivatives market is mostly focused on three exchanges. The main one is Deribit, and then we have Binance and OKX. Those are where probably 95% of the derivatives flow goes. So we have access to those exchanges, and we're very excited to show you what we have today as well. But let's go into the dashboard first. So when we look at crypto, derivatives is obviously key, but at the same time, crypto is really impacted by the macro environment, by the correlation with other assets. So we built also models that can help you understand whether we are in a bullish market, whether we are in a risk-on market, and whether like we can use also price action at our advantage. So what you see here is our market summary section where we have all the crypto that we covered, that we showed you in the previous slides. We have their performance daily, monthly, 3 months, 1 year. And then we have our new three quant models, which are the QRSI, which is a new way of looking at crypto, but by using the same approach used by the traditional RSI, but we did create a new version based on our models. So we have our new QRSI, which is proven to be more statistically relevant. So I will show you where you can find this as well. We have our directional indicators. So our Q crypto direction can tell you, based on our model, if we are in a bullish or bearish trend on the crypto that you're looking for. And then this is for the overall market. Are we in a risk-on, risk-off scenario? For those who missed the session yesterday, we talked about crypto as a macro asset class is becoming more relevant as an asset class. It's important to understand how the asset class is correlated with other assets. So if, for example, the S&P 500 is in a bear trend, how does that affect the crypto market? So we built our risk-on, risk-off indicator. To see those indicators, you can click under the quant section, and then we're going to spend maybe some time on this, and maybe Dan, let me know if you have any question. And then you can look at the different crypto that are covered. And here, for example, we have Bitcoin. First, we have also our Q score, which is really looking at the asset from different standpoint and factors. We have our option score, which is looking at the option data coming from, in this case, Bitcoin, volatility, and momentum. So we are trying to see, okay, like based on those 4 factors, are we in a very bullish market or are we in a very bearish market? 0 is the lowest score, 5 is the highest score. So right now, what we see for Bitcoin is really we are in a very, very positive trend coming from the option market. We are in a very positive trend coming from the momentum side, and we also have a low volatility, which also can help us confirm the trend. Then we have our risk on and risk off indicator. So you can see it here. Very, very simple. Above 0, we are in a risk on scenario. Below 0, we are in a risk off scenario. That can tell us, again, it's not a trading recommendation. It's really telling you from the macro standpoint, is the market in a bullish trend for crypto or not, right? By looking at what's happening out there. Then we have our directional indicator. This is telling us, are we in a bullish or bearish bias by looking at price action on the crypto that we're looking for. And then, and here you see it on Bitcoin. And then you have our RSI. So what's interesting is that we are now at very high QRSI, which again is different from the traditional RSI. And here is probably an interesting area. We can combine all these 3 together, and then we can also move into more of the option data. So by clicking at the option side here, we can open our, in this case, Bitcoin. We are going to use Deribit because, again, we see that most of the flow comes from there. But again, if you come into the dashboard, you can see that you can access our multi-exchange tickers, and we have all of those here. So what we have is very similar models that you see on our stocks, ETFs, indices, and futures. We have our net gamma exposure chart right here. We have our multi-expiration net gamma exposure chart right there. And then scrolling down, we have also our skew chart, our volatility smile, term structure, volatility surface, matrix, and so on. So there's like a lot of different tools. And then very exciting, and then we can talk about it, is also our swing trading model for the crypto as well. And this basically can give you really a good idea whether you are day trading or just like an investor, on where the price could be and what are the levels that I should be paying attention over the next 5 and 20 days.
Yeah, wonderful, Fabio. So much to see, so much to do, and yeah, I don't want to repeat all these great stuff which you already not only heard from Fabio now, but the whole week has been focusing on crypto, how to trade it, and what you can do with it. Today we try to marry a bit the aspects of options and crypto, and maybe we should catch up where we are here, but also for all those who have been trading options on the long run, and also maybe for those who have joined here because they have been trading crypto for a long time, but haven't been used to trading options. So basically, just trading crypto as an investment, it's just like everything else, you just go long. And if you go and look at other derivatives like futures, they are one-dimensional, which means you will be trading in one direction, short or long. And the difference with options is you have some other factors you should be bearing in mind. So a very simple and brief example would be, and we will just dash into how MenthorQ can help you as an investor, maybe short-time swing trader or long-time swing trader even, or as a day trader, and what you can do with options. As I said, options are 4-dimensional, and we don't only have the price, which plays a role, but we also have time, No one can escape the factor of time. We have volatility. And one thing which is different in the options markets still for crypto is that we don't have the classical thing which we see with other option markets. Like the option market is seen as the smaller part, if you don't know, next to stocks and other stuff or ETFs. But in the end, it's the option market which moves the market. I'm not talking about the bond market. This is another animal. But in the crypto markets, still we don't have that. So this is a factor which you should always take into consideration, that trading crypto with option gives you just more leverage, and it gives you more ways of trading it. You don't only trade directional, you will also trade time and volatility in other aspects. So before we lose ourselves in that, I think the best thing is that we jump into the dashboard, start looking at things where we can find potential trades for, on the one hand, like Fabio said, investors, long-term investors, how we can find trades for swing traders, and maybe we can have a look how you can trade these things as a day trader. Because I remember when I started trading crypto, and I do trade it, mostly swing trade it on some systems I've built and I have, but I'm very happy that my life has become so much easier now that MenthorQ is here. The thing is that you want to know what kind of trade you want to have. So if we go into, I hope everyone can see my dashboard. If you start here, like Fabio showed you, you have the dashboard. So the first thing is what I do is I will look at the market summary. And let's pretend we are investors. We believe in crypto. We believe it is an asset class. We got a flavor into our whole portfolio, 5%, 10%, 50%, whatever you feel like. And the first thing we see here, and this is great, we are in general in a bullish regime. If we look at the chart, you will understand why. And if you're a long-time investor, you have a long horizon, which means you can either dollar cost average that, or you could be smarter and you could hold on what you have, especially due to tax reasons. But you can always buy more crypto if crypto is, let's say, in a bearish stance and you see a bottoming. This has worked out very well for many investors over years. So MenthorQ is here with all the models and everything to help you. So either if you are an investor, you might buy a bit less crypto now, because if we are in a high market, nothing just shoots up. Things go up and then they come down again and then they go up, because the world of crypto is moved by different things than the market. But we see a lot of correlation, like Fabio said, and my prediction is that we will see less huge swings in crypto, but we will see some swings a bit in the tact of the general market, which we already monitor every day. So if we go to the quant models, we'll stay with Bitcoin today, because it's the derivative most people trade, basically. So if I was an investor now, would it be a good time to buy? Let's say if I have $100,000 or $1 million, I want to invest in crypto, and I believe crypto will be the thing, or will be an important asset. I wouldn't invest it all now. I would put in a small portion, maybe size it up for the next months and wait for retrace. Is a retrace on its way? If you just look at the chart, you won't be able to tell that. If you show a chart to a small child or someone who doesn't know anything about the markets, they will say, "Oh, it goes up, but goes down." So best thing is just to look at the data. So we have low volatility. We will talk about options in a second. We have it's a high opinion, and we have the momentum is high. So we expect this to ride out. So if you are an investor, a long-term investor, you can do two things. You can buy more crypto, just purely crypto, or you could use deep in the money calls because the effect of theta is less there, time out, which gives you a leverage. What do I mean by that? If you buy or sell options, you have a huge leverage on the underlying, which is Bitcoin here. So what I said in the beginning, options are affected by time. If you are long options, time is ticking against you. If you sell options, then you owe someone the amount of the underlying, then time is ticking for you. But if we have the stand of a long-term investor, we want to profit from that. And the same thing happens with stocks. If you buy deep in the money options, and these deep in the money options are far out in time, you will have a less impact of drawbacks. Would be one thing, and the other thing would be you would also profit from the swings more than if you would just be invested in crypto, because as I said, you have a leverage. The other thing you could do is, how do you get? You just are a long-time investor. You want to get things cheap. The same thing you would do with a stock. Let's say there's a stock which is worth, which is sitting at $100 right now, but you are just ready to pay $90. What do? You sell the put there, and you wait. And until then, you collect the credit. And if you're ready to buy this, then you can do that. So if you believe you are ready to spend, you want to buy one Bitcoin and you are just ready to spend 100,000 dollars, and you want to leverage it with options, then you can do it by going short here. And then if we have a price, if the price draws back and your short strike is hit, because we're talking about options, then you will get these options assigned. You will be able to keep the premium you received. This is just the thing for long-term investors. So right now, if you want to get your hands on crypto in a cheap way and make money, it's the most classical thing you can do. You can look at these levels and take a look here. So what do we see here? We see risk off, risk on environment. So the spot price is basically at its highest right now, and we see a risk on environment. Which factor in the direction, we see a bullish direction. So if you take a look here, every time we hit the level 2 in the Q crypto direction, it didn't mean we were going down, but we went down a bit further, you see? And at some point, when we saw that here, at some point, maybe let's say you started here at this one here, then you waited and you waited and you waited, and here you had your first chance, and here again to get your crypto for $100,000. So what happened in between here and here? If you were a seller, of options, you made money by waiting and getting crypto, buying it here. Because if you're a long-time investor, it makes a big difference if you buy it here or you buy it here. And this is where MenthorQ helps you. Well, let's take our last US RSI score. Everyone who's using technical analysis knows what RSI is. I won't go into the details of explaining that, but we have a chance of a bearish probability. So this means if you are looking to buy crypto cheaper or get your hands on cheaper, this is the chance to do it there. So this would be the stance for a long-term investor. So let's go into options. This is the dashboard how we know it. We have our key levels, we have our call resistance, we have a put support, we have our metrics, which is one of my favorites. So you see all these things, you see the DAX, the changes and everything. Everything is still bullish. We see the positioning, which is super important. We see again, where the DAX and GAX profile are moving. And you see the net GAX, which is moving. And what do we see here suddenly? We see here for the 12th more of a bearish direction. Then again, we see more bullishness. Here it is more balanced. So this gives you all a hint that you, as a long-term investor, might have a short here. So a simple trade would be basically go short. And this is the difference. Go short because something might happen. Where did you find the place to go short? Normally we talk about the I'm sorry, we have to move 1 second again. I was too fast. So we go down here. If we go down in our swing model, where do you find the level to go short? We see the risk trigger, and the risk trigger always tells us something is going to happen. We have a lower band, which is good if you want to sell premium there and don't get assigned. But now we're talking for what we can do as a long-term investor. As a long-term investor, the risk trigger, as you see, always something happens, we go down. And we go down often to the 100K area or even lower. So that would be a very, very good way here to maybe go short a bit higher and wait, basically, and wait here and wait here to get a sign. So this would be a good way of going short. If you want to make money, and now we can go to the swing trader because we are already here. Let's say you are a swing trader and you know a bit about options, you know about theta decay, you know a bit about Vega expansion and basically how everything works with implied volatility, and you say, okay, I want to make some money for this week. I'm gonna sell. I'm gonna go short here, but maybe with a bull put spread. Where would you set your short strike? I would set my short strike around the lower band, and knowing that most probably this will just go worthless. So for a 5-day trade, that would be a very nice and easy low risk trade. If you want to go a bit further and say, okay, I like swing trading, but I would also like to make a bit of credit on the upper side. And I know that the risk trigger is something where something happens, and most probably we're going to go down because we saw all the models which indicated that most probably there will be a short reversal coming here. You could also basically sell an iron condor, as we have shown in so many other sessions. And again, the risk trigger would be a nice positioning, maybe a bit higher for the short strike. So you would collect premium for the next 5 days. If you feel shaky because we are in gamma risk, we're talking about options, not purely crypto. No, gamma is always the aspect and the thing which can shake option traders. And you say, okay, I would like to sell premium, go out a bit further in time, maybe an iron condor, maybe an iron fly, or we do a risk reversal or something else, something low cost. Again, then you have the 20-day swing model. And how can you use that? How do I use that for these swings? You can use a directional, and will you just go for 20 days? Most probably not. You will go out for 40 days. Why is that? Because if you have a 40 to 45 day out trade, after 20 days roughly, due to the changes in implied volatility and the rise in the risk and the gamma risk rising, it's always a good way to close these trades around 20 to 14 days to expiration, even if you are in a swing trade. If you are in full profit, do it earlier. But this helps you not only with time, because you will have collected, let's say, 20 days of theta, which is the time premium. but you will still have enough time to manage this trade and you don't have the gamma risk. So if you look at the 20-day swing model, either you go in a directional trade or you just go in a non-directional trade purely with the aim to collect premium, then I would suggest you just double that and add another 5 days to be relaxed and choose these levels if you like, because after 20 days, you will be closing. A lot of people, I can show it here. When I talk about 40 days or something, they choose, let's say, the 26th of September, and they show me their trades, and I say, why? Why? Yes, you can do that, but you will get less premium. In the end, you can open a trade there, 56 days out, but in the end, you look at the levels at the time you want to manage your trade. So this is something you can do as a swing trader. And if you really feel that you can ignore Theta and you like calls and you think crypto will go to the moon and all the models are bullish, again, this is a great great spot. The lower band is a great spot maybe to place your long call in the money. It will be more expensive than a call which is out of the money, so above the strike price. But the thing is, it's easier to end up in profit. So statistically, I would always suggest if you do something with a debit, you manage that and do a debit spread, and you don't fight time that hard. But this is up to everyone else. And we will go to day trading in a second, Fabio. But you know me. I like the skew. I like the term structure and all the other stuff. But I won't make a deep dive today because we have so many other things to cover. But it's always a good thing to take a look not only at the simple models you see and at the simple levels like the call resistance, the GEX and DEX levels, which react. The GEX levels, and this is the thing you should remember from maybe some other session, GEX levels, where there's a lot of open interest there, they react as resistance and support in general. They're not the classical magnets. If you look at DEX levels is where market makers are basically hedging. They act also as supports and resistance, but normally they act as magnets. So this is the thing you should always keep in the back of your mind when you plan and try to trade. I will swiftly go to the skew, which is something I like. You can also take the volatility smile. But what do we see here? We see that we had a rip lately here, and we see how price flew. And when did price go up? The moment we dipped here in the call territory. So everything shifted. So even if you missed the first move, the moment you saw that here should alarm you. That's why this is important. Yes, you have all the Q scores, you have all the other stuff, you have the models and everything, which make things super, super, super simple. But we look for confluence. And this is what the models do for you. But still, it's always good to have an eye and be able to read the skew. And MenthorQ gives you all that stuff. They give you so much data, but they boil it down to the most important things. And if you really, really want to become an options trader and you really want to take advantage of options, no matter if the underlying is crypto or something else, but crypto is a special underlying. I will give you that. It's a very volatile and influenced by a lot of other things. Then please take a look at the skew, see what the market is doing, see where the market is positioning itself. Don't only fight the things which options bring with themselves. The price changes, the changes in volatility and in the regime of volatility and in time, but also the positioning of the market. And here you have the visual. I think it makes it so easy to do that. And you can see the things here in the smile curve, and as you saw here, price went up and volatility went down. Why is that? Normally, when prices go up, volatility goes down. So as a premium seller, it's always good for us if in the end, if we want to get premium, good premium, this happens normally when the market dives. But we also, if we set up trades, we also have to see if the trend is not too extreme, and it's always easier to get premium for puts than calls. Why is that? Because puts are always priced a bit higher because protection is something everyone needs and wants. Okay, Fabio, if you have something to add, please do so. Otherwise, we will try to change and maybe go into the day trading session, what we can do with options, where are the risks, and why it's different trading crypto with options as a day trader than simply by trading with futures.
Yeah, thank you, Dan. This was awesome. I just want to show one quick thing. Let me just add this to the stream. So if you go to our documentation, this is available for free for everyone. We have a section of our Finance Wiki section, which is called Quant Strategies. And then here, what you can do is you can use, we've done it in the past, we've done like back testing on swing levels, on our Q score, and now we have also backtesting document on our crypto strategy. So you can come here and you can see basically how the different indicators that we showed you perform. What's really interesting is the power of the risk on and risk off. The assumption is really, really simple. We go long a crypto asset. In this case, we tested it on Ethereum when the risk on scenario is greater than 0, and we go short an asset when the risk off is below 0. So here it shows you how you can look at the macro environment to potentially generate alpha by using that indicator compared to simply holding the asset over time. So the red line is the Ethereum price over the past 6 months. The green line is the return of the strategy. So as you can see, outperform the simple buy and hold, and also we had peak of around 200% return during this period here. And yeah, if you want, Dan, I can pass it back to you.
Yes, thanks, Fabio. One thing I would like to add, I already said that. So this makes life super easy for a long-term investor and or simple as a swing trader. You go long, or you can take the reversal and go short. But you should always think about that if you do it with options, that options also have these other factors. So if you go long, you should really take the time factor into account. So if you feel like, and the models show you that this might be like a trend, a nice trend, maybe just don't go long for 5 days, because if the price doesn't move enough or something happens, we have basically a deflation and volatility, or even worse, not a lot of things happen, then Theta might eat your debit away. So this is something you should always keep in mind, that options do have other factors. That's why a lot of people like trading futures or other aspects. They have other risks, definitely, and options give a lot of advantages, but they also come with a lot of risks. So let me try and go into, for the last couple of minutes, let me try to go into my there it is. I hope everyone can see my trading view. Does everyone see my trading view? Yeah. Okay, so I'm on a daily chart here, and we talked about long-term swings. You can do this without ever looking at the chart. This is the amazing thing what Fabio showed you. You just open MenthorQ, and if you see risk on, risk off, you just buy call or go short or do a risk reversal for free or something like that. These are the nice things. We will do that. I had been sharing some crypto stuff long time ago. I will go on, so maybe show some trades you can do with little risk or with more risk. But what is interesting here? The first thing is that we see how good the levels work. So if you are a super relaxed crypto trader, you have been holding a long-term portfolio, you know something about options, or you're just dipping your feet into options and say, wow, I can leverage that. I want to do something, but I don't want to day trade. I don't have time, or like I live in Europe. I can't be doing that only when the markets are open. This is a good thing. The option market is open 24/7, but you want to take it more relaxed. The first thing is we see here, the levels do work. Like we had all this hustling here. And what you see here, let me just show you what I did. I took one of my favorite things. I basically created a roadmap, which is something a lot of people haven't seen that you can do with MenthorQ. Basically, this is the end of days levels. So this is the simplest thing is to create a roadmap, and you can even take out the levels, and you can just trade with this here. So we know that something is here, and most probably we're going to be stopped out here if nothing else happens. But for the sake of it, let me put this into perspective. So what do we see here on the long-term horizon? The 1-day max, it holds. So if you were trading options on it as a day trader, around here, you could have sold a bear call spread or gone short or something. Wonderful. You would have collected great premium. Or what I like to do is, if I see that we're going into something like that, and if we boil it more down to, let's say, 15 minutes, reduce the noise, give it a second. I like selling flies during the day. So yesterday we were here and we were far away from the high volatility level, which I always like. For me, the high volatility level, if I want to go long or going to go short, is the ignition. And let's say I would do it on the 0 DTE. The moment this breaks, the next level I'm interested in most probably is not the GEX one. You see, I've taken out all the other GEX levels except the GEX one. Would be here, something like that. So you have a nice way to take profit. This wasn't the chance yesterday because we were high above everything. So we just started up like the market exploded. So we crashed the general call resistance. We crashed the call resistance here. So I knew something would be happening here. I was looking at that. So I said, okay, what is very cheap? Maybe where can I put a trade? Yes. One of the trades you could have done is, well, the call resistance was poached and poached again, and then it finally broke. Either sell somewhere here because you knew it would be holding. So something I like to sell is around here. So because the call resistance, because it's a big call resistance, becomes a support, you sell some premium here, and then you can wait, it fades out, and then you can sell again here. Or you just go long because Theta isn't that hard. Theta is on steroids in that day, but if it's ODT, but you have the price movement which you expect, and you should set the target. You should always have a target. That's why if you sell options, you maybe sell or you buy options, maybe more than one contract if you can afford it from your buying power, and have price targets. And you should know your price targets before. So in preparation for today, I did some trades yesterday. So I looked at it and I said, okay, if we break above here, I will do two things. Like I said, I will sell some premium around here. This is what I did. I will put a fly here because it will be cheap, most probably. When we were hovering around here, I put a fly here. What is a fly? We sell an iron fly, short flies. We sell two short options in the middle, and we give it wings. So I gave it wings. One wing was here, the other wing was here, and while we were going here, I closed the first, and when I went here, we closed the other. So that was nice because it was so cheap and exploded there, the price, and it was really nice. And the other two trades I did was going long here because I saw that I knew that we would have this as a support. I sold some credit spreads here, and basically I went long here And I knew that this was be my final profit-taking area. And if we put this more into a perspective, you can be a swing trader over the days, you see not much is happening here. So what do we do here? If we are day traders or swing traders during the week, if nothing happens here, it hovers around the high volatility level. It is above it. It can't decide to break above. Then we sell premium on the basically like iron condors on the nice levels we like. And if we see majorly moves, then we can follow that and we can sell like I showed you accordingly. So MenthorQ makes it so much easier to trade. And if you have done that for a couple of weeks, you just can take out the levels because you should know what levels is what. And this is so easy. You will see you can just trade with this. So, this is some lighter levels here. This is something more important. And if this breaks, we should see a stop here. And this is what happens. So even if you take this short long here, this is like a lot of points. This is a lot of stuff here. And just this, if you go long, you make money here and you can again sell here. So this is so nice. Like you see, when I saw that this area was pinched, I didn't have the levels on because I don't need them anymore. I have my roadmap. It's called the roadmap for a good reason. This is the acceleration, and we took off. And I knew once we were here, was probably going to stop here, but in between here, something would happen. Either we go down and again, we would be stopping around here, or we would stop there. So much things you can do where you can use options because you not only play the direction because you play volatility, you play the theta card all together. So what we will do, we have talked with Fabio to start options course, grabbing the basics, going to more advanced stuff and working ourselves on. And we had a lot of people asking for more in-depth strategies and other stuff. And we will cover all this in the coming weeks. And I don't know, we will discuss that, how we can do that, but I'm sure that it will make sense maybe to touch in each session just a bit what we would do, not only with equities or ETFs, what would be a nice trade with options be in one of the crypto things, because we have the crypto here, we have the options here, so we can even in this area we can give you some insights so you can marry these two great aspects, options, which is one of the most important things in the markets with finally with crypto and have an edge with all the MenthorQ data and everything which is laid out here for you.
I think that's
So I think
yeah, this was awesome, Dan. Thank you so much for your insights. And as we say, guys, the crypto product is now live. So if you want to join us, just go on mentorq.com and you can find all the information about the new models. But everything is available via the dashboard. The levels are also updated into the different trading platforms. So they are also integrated with 10 plus applications. So you can leverage them on your platform. So we are very excited about the next step, Dan. And for now, I really want to thank you for the time and for the explanation you gave us.
Yeah, thank you very much, Fabio, for having me, and thank you guys for being here, for following us, and I'm very excited about that. And I think we used our time wisely, and more great things to come. And stay humble, use the data, and give us questions we can ponder about and help you develop into even better traders and help us basically help you. So thank you very much, Fabio, and I wish everyone a very successful Friday and very nice weekend ahead, and gonna see each other next Monday.